many sights to see.
Hello, traders. Gary Wagner here. It is Friday. Finally, happy Aloha Friday. It is approximately 10 a.m. in Honolulu, Hawaii, July the 8th, and this is the Daily Report with a incredibly disappointing jobs report today. We had gold trading substantially higher, breaking to a few barriers which I feel are absolutely critical and signaling, I believe, the return of the bull in gold. First, let's take a look simply at our weekly chart here on our lower right. Let me go ahead and blow that up for us. And as you can see, in terms of the ground that it covered, you can see that these last two trading weeks prior, right in here, were completely taken over by and closed above this significant point. Now, why do I believe this is significant? Let's take a look on our weekly chart in which I have been looking at our longer term trend line. Now, realize that we looked at this as this long trend line being actually violated, which it was, when the market came and barreled through this particular chart. Now, this is a daily chart. The market did come down, but as you can see on today's trading, we are right back at that point. And to me, that's incredibly significant. Another way to really put this into perspective is, traders, if you recall, about the middle of the week, we looked at this monthly chart, and let me go ahead and blow that up for us, traders. On the monthly chart, I have inserted in Andrew's pitchfork. As you can see, our handle is here. And of course, we have our upper and lower channel lines. Now, take a look at the close and current print at 1542. As you can see, it is above that middle line. And that also is extremely significant. So that when we take a look at our daily chart with Elliott wave count, and as you know, at the beginning of the week, I realized that what we had been looking at was in fact a little bit different than I had originally perceived, because originally I perceived this sell-off and really a pennant formation. This is what I was looking at as being our breakout to the upside. We then had this, what I thought at the beginning was a stalled or failure in our fifth wave. As you can see, that is not the case. And I believe at this point that this market is headed to 1600 and beyond. I personally feel at this point that we are going to witness a new record high in gold. I believe that we will take out this area being 1577 right in here. And my sentiment is, in terms of where this market could go, one of the easiest ways to simply do that is to look at what we saw for a fifth wave in terms of what is possible. It is simply easiest to do what is called a line comparison. So if I look at wave one, for example, that's this wave right here. And then if I take that wave one and I put it to the bottom of the market, and we want to make sure it is what is called an auto scale, which it is, and I put it to the beginning of where I believe wave 5 has begun, as you can see, my new target right now for gold during our fifth wave is right around 1600, 1615, 16 to 1620. My belief right now is that our new target for this wave is going to be above $1,600 an ounce. That's quite a change from the negativity that we saw within the market and the lower prices that we saw within the market as recently as 2 weeks ago. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you next week for a daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange, so strange.